So welcome, thank you for coming, thank you very much. So I'm going to just introduce who I am, and then I'm going to tell you a little bit about my relationship with Carlos, and then he will take over for the rest of it. He's the pro here. Today's seminar will be how to trade like the banks, and I'm going to tell you a little bit about myself. So I've been an entrepreneur and an investor on and off throughout my life. I previously worked in London in finance with IG.com, and I worked in KPMG, Canary Wharf, if you know KPMG, I do. And I used to work with Elena at Hotel Beds here in Mallorca when I first moved to Mallorca. Around that time, actually, not long, I think it was just before then, I met Carlos very early on here, about 5-6 years ago. And I can't actually remember how I found the group, probably through a mutual friend, but we set up a traders group, a traders community. So what is trade? Like all the sort of things you're going to learn now, like all the basics, like I kind of had a little bit of an idea because I worked in IG.com, where they traded Forex mainly, foreign exchange pairs. But Carlos sort of really kicked it off for me, like, this is how you place a trade, this is how you do it properly, you know. I was kind of used to seeing Robinhood and eToro and, you know, these sort of like flip a coin, is it going to go up or is it going to go down, like just put $100 in and see what happens sort of thing. So Carlos came along and sort of really showed me Elliott wave principles and patterns and, you know, different ways to actually analyze charts. And this was like 5-6 years ago. And then we kind of drifted apart, the group fell apart, I started working, I had a kid, like, you know, a lot of things happened, you know, we had life in between. And then obviously, you know, I've always kind of had in the back of my mind, there must be something more that I can do with my income, my disposable income. So I used to reach out, I'm a bank manager here with Bank of March, Sonia, and I said, what can I do? Like, I'm earning a little bit more now, like, what can I do with my money to make it sort of work for me? And she was like, oh, we've got these great family business funds, investment funds with Bank of March. They return like 8% a year, 10% a year. I was like, well, you know, that's okay, it's pretty good. Put my money in, it did all right, and then COVID hit and I lost a load of money. So I was basically paying in every month, like all my excess disposable income into this fund, and it just was going down. So I was like, okay, there's got to be, you know, there's got to be something else. So I've done trading over the years and all these things. And Carlos has put me onto a really great strategy. Not only some of the strategies that we've looked at years ago are really hard to get your head around. Like, you've got to study, you've got to read books, it's really difficult. And it's really hard to implement live in the market. When it's going up and down, it's very hard to be like, well, where am I in this strategy? But this new strategy that he's been teaching me over the last few weeks, it's low time at the charts, you don't have to, you know, spend a lot of time looking, and it's quite easy to read. You know, not all of the trades are successful, but we can talk about risk management and those things. But you'll see later on, I'll show you my account that I've been using. It's been really good, it's been really successful. So hopefully you can learn at least the basic principles. And yeah, we'll take it from there, I think. So I guess over to Carlos, who's our expert. And
yeah. So thank you, Scott.
Thank you.
And thank you all for coming. It's nice to meet you all. And some of us, we know each other for many years. And so I started as a kid, my passion for the business world, investments, trading as well. And it was Michael Douglas' Wall Street movie that got me very passionate about it. And since then it started, but you know, I had a family that they tell you need to focus on good grades, go to university, and then you'll have a good job and that's success in life. You know, that's what I've been taught in my family. I still really wanted to choose the other path, but you know, I've had this obstacle when I was a youngster, and eventually I did go to university, but once I was in my first year of uni, that's when I said I need to find the way out. I started studying on my own. I started buying books, ebooks. I paid for webinars, and then I started learning about economy, microeconomy, the financial markets, personal finances. What do the rich people do? Because this is the main key here. Nowadays, 95% of us are either on a job or self-employed. 5% of the population are business owners and investors. And the funny thing is, this 5%, the top 5%, have 95% of the wealth in the world. And 5% is for the rest 95%. So how do they work, these top 5%? There's obviously an education that is not taught in schools, in university. I've never met anyone in university that has been able to teach me any of the things we're going to teach you today. Because even though they study economy, business degrees, they get the education to be an employee. That's what it is about. The system wants you to be an employee, work for a company, and that's it. Pay your taxes. And the rich people, they do it in a different way. So since it is hard to find this education, I decided to start on a mission, teaching people how to become wealthier, how to have a better life, because putting money aside, I think making more money is important for families, for any person, because if we make more money, we can afford more things and we can have the life we want, right? So how do you manage your money? How do you invest it? How you build businesses? So this is the type of education that we teach in Project 1M community, and it's the community that Scott and I are leading here in Mallorca. And that's where it all comes from, you know, since it is such a struggle to do different things, we want to give people an easy way into learning all these things. It's not easy money, it's not something you make it happen in 1 week, but it is the right education to get you to what these rich people do in the world. Put in their money, work for them, and put in people, work for them, right? When it comes to money, you do it in the financial markets. Inside the financial markets, you can trade the financial markets, and this is what we're going to be doing today, because you're going to learn how we can trade the markets, basic concepts. You're going to learn how you make a profit in such markets, and then at the very end, we'll explain to you what is the strategy that we use, okay? So there's 3 major financial markets. First, we have the Forex, which is the foreign exchange markets, then the equities and the crypto. So the Forex, you all participate in the Forex market because it's the currency market. We all use currencies, the euro, the dollar, the pound, the Swiss franc. When you travel, you all have traveled. You all have gone to the bank to exchange your euro for dollars or borrowed. Yes, that works. You've been exchanging currencies. You use these currencies to buy things. So you're part of the Forex market because thanks to everybody moving the money around, the Forex market gives opportunities for us to trade. And it's the biggest market in the world. It moves $5.4 trillion a day in transactions. Not millions, not billions, trillions. So it's another level. Who's also participating in the Forex market? Almost everybody. Normal people, traders, speculators, hedge funds, investment firms, financial institutions, central banks, even the governments make large transactions in the Forex market. So it is one of the markets we can trade with the strategy you will learn today. Then we have the equities. You also participate in some sort of a way in the equities market. Equities refers to the stock market. And the stock market, you have companies, right? Companies like Apple, Microsoft, Amazon, and these companies sell products to end customers. So if you have ever bought an iPhone, or you have bought Microsoft Office, or you have bought something in Amazon, you are part of the stock market because you're purchasing products from a company. This company, thanks to having customers, the companies grow, and these companies are listed in the stock exchange for people to buy shares, okay? Because there's 2 different types of companies. You have the private companies, they do their own thing, They have their shareholders nobody knows about, nobody knows what they're doing. But once companies go public, and they're listed in the stock exchange, then anybody in the world can buy one share, at least, of these companies. They can see all the financials because they're audited and they're public. They can see behind closed doors what is happening in every company. And people can analyze companies, so they buy shares. And what are shares? Well, you know companies have a value. So these companies decide how many fractions they dispose from the company to the public, and the value divided by every single unit will give the price per share. Okay? For example, Apple is now $120 a share, for instance. And not only that, you can earn dividends on these companies, because if you're a shareholder, you're part of the company, you will get proportionally the yearly profits this company makes. But that's not something we're going to go into, because we're here to trade the equities market, and it is a very big market as well. Now we have the cryptocurrency market since 2008, 2009, and you've probably heard about Bitcoin, right? All of you? It's funny because 6 years ago, nobody knew about it. I started investing in cryptocurrencies in 2016. Almost nobody. I've had 40 people in rooms like this, maybe 2 knew what was Bitcoin. But now it's more known, now it's a more developed market, and it's great to see how much is developed. But the crypto market, you're not participating in it directly or indirectly, because it's the market where digital assets are listed. So these digital assets are made to replace money, to replace platforms, notaries, because the cryptocurrencies are powered by blockchain technology. Okay, they're outside the system, the central bank system, and in a decentralized system called the blockchain, they have many different applications. Bitcoin was made for digital payments, but then we have Ethereum, the second largest cryptocurrency. Is built for developers to build applications. It's built for smart contracts, which helps a lot when it comes to notary services. When you need a lawyer to sign your inheritance from your family, you need a lawyer to inherit money from your family. Well, through smart contracts technology, you need no lawyer. A smart contract, a piece of code, can execute everything automatically. So there's many blockchain technologies that are changing the world in the world of crypto. And it's a market we can trade as well, since it is a very volatile market. It moves all the time. You will see Bitcoin today is $16,000, tomorrow will be 17, or I think it's actually the other way around. Yesterday was 16, today it's worth one Bitcoin $17,000. Okay? So these are the 3 markets we can trade with this strategy, and the 3 main pillars of our community. And now we're going to talk about what's trading. So I define trading as the process of transacting in the financial markets in order to make a gain, a profit. Okay? So how can we make a profit? Well, we're going to see a couple of examples, but as long as I buy cheap and I sell expensive, I'm making money, right? We all understand that. So, but let's see a couple of examples so we understand this fully. Let's just say Apple stock is $120 per share. And I buy 100 shares. That is a value of $12,000. Well, if the price goes up to 130, then I sell my shares and I've made a profit of $1,000. So this is how you can make money in the stock market. Also the other way around. You can place a sell order for this stock price, and if the price goes down to 120, you make the profit the other way around. And these are the 2 different types of trades we can do. Buy, or go long, or sell, go short. You've seen The Big Short, the movie? What is this movie about, The Big Short? They short in the market. The market is about to collapse. The market is about to crash. And there's a few guys that shorted the market, and they sold all the way up, and they benefited all the crash that happened in 2008. It's because they went short. It's making money the other way around. See this simple example. let's say I'm in the furniture business. I sell furniture, okay? So if I have a physical shop, I buy furniture and I put it on my shop for me to sell it. I'm buying from my supplier first, and then my customer will buy for me, and then I can sell it. That would be buy and then sell afterwards. But what if I can sell this furniture online? And I don't have the furniture. The furniture is at my supplier. And I get the order first, my customer first pays me for this chair, and then I call the supplier, hey, supplier, we need to send the chair to the customer. So I've sold it first, and then I buy it afterwards to make that margin profit. So this is the same. In the financial markets, I can make money as the price of an asset goes up or as the price of an asset goes down. The only thing I need to know is in which direction it's going to go. Because if I go short and it goes up, I lose money. If I buy it and it goes down, I lose money, right? But this is a simple example when it comes to stocks. A more complex example, but if you can understand this, then you will have then a perfect idea what is it we do in the Forex market. So right now, I think the exchange rate for the euro dollar, I think it's €1 1.05, 04,
Yep.
something like that. Recently, in the recent months, €1 has been equal to $1 or even less, yeah, but it's been at this rate. So this is a very good opportunity for Americans, for example, who have the American dollar, or companies that they have high liquidity in dollars. For example, I don't know, any company that has business to do in the States and they get paid in dollars, they have large amounts of dollars. So nowadays, the guys that have exchanged their dollars to euros, if I exchanged it at this rate, $10,000, I have 10,000 euro, okay? Because it's a one-to-one exchange rate. Now, in 2007, 2008, €1 was worth $1.6. So what if we go up there again in the next 10 years? Well, this 10,000 euro, then they will be worth $15,000. So this is how I can make a $5,000 profit by taking advantage of the exchange rate of the euro-dollar pair. And I can do this with the pound, dollar, dollar CAD, dollar Swiss, dollar yen. There's 30 different Forex pairs. And these are the opportunities we get in the Forex market. We will study if the Forex pairs will go up or down, and then we can go long or go short to make money in that, okay? And one last example, when it comes to Bitcoin. So Bitcoin is very similar to stocks. Yesterday, Bitcoin was $16,000 approx, and today it's actually 17,000, one Bitcoin. So if I buy one Bitcoin, if I bought one Bitcoin yesterday, by today I would have made a $1,000 profit. Or see this example, 500 profit, right? In one day. But of course, I need to have $16,000 to buy one Bitcoin. I need $12,000 to buy Apple stock, yeah? Or I need this much to make a 5,000 profit in the next years in the euro dollar. But what if I can do the same, but with money I don't have? That comes in with the concept of leverage, okay? Now leverage has many different meanings, but in the financial markets we call leverage the tool in which we can get access to more liquidity with very little money, okay? So there is platforms called brokers that are the intermediators between us, the traders, and the financial markets, okay? I can go myself to the stock exchange in Wall Street and buy $12,000 worth of Apple. But through the broker, I can do the same. And I don't have to go to the stock exchange. And not only that, the broker tells me, hey, I have liquidity. I have tens of thousands of shares of Apple. You can leverage and use my liquidity, and you put it in the markets. And once you close the transaction, I will take a commission from you for using my liquidity. And this is when leverage comes into place. We will explain later what's a broker so you understand it better. but we can leverage from 1 to 10. So 1 to 1 will be no leverage, okay? 1 to 1 means I need 16,000 to buy 1 Bitcoin. That's 1 to 1. But what's 1 to 10? I only need $1,600 to trade 1 Bitcoin. I don't want to 10 leverage because I'm leveraging times 10, right? We can go up to 1 to 500 with the broker that we use. But yeah, let's see an example using leverage. So before, I had to go to a cryptocurrency exchange online to buy 1 Bitcoin with $16,000, right? But through leverage, I go to my broker and I place an order for 1 Bitcoin, and the broker will only require me to have this much money to trade 1 Bitcoin out of 1 to 10. That means by using this little money, I can make the same profit as before in the transaction. I don't need $16,000 anymore. With 1,600, I can make the same profit. And now this becomes much more profitable because this represents a 30 to 40% gain. Before, it was probably let's say a 3-4% gain. So this is what leverage does. With very little money, we can trade large amounts in the markets. Do you all follow? Yeah, you sure? If it gets complex, let me know. So this is if we win. But what if it goes the other way around? Well, what can go wrong is I can get liquidated. Now, what does it mean? So yeah, I only need this much to open a trade worth 1 Bitcoin. But what if the price, instead of going up, it falls to this price? And I'm losing $1,600 in this trade. The broker will cut my trade in a loss, and I will lose all my money. Okay? I get liquidated. So yeah, leverage is nice, because with little money I can make large profits. But if it goes against me, I can lose all the money in this account. Okay? So how does this affect the broker? It doesn't affect them, because the broker gives you $16,000, right, worth of Bitcoin. If you lose, they get your money, so they have their 16,000 back. If you win, you get the profit, and they will have their liquidity back. And either way, you win or lose, they make their commission when you close your trade. So a broker never loses in this mechanism of leverage. You are the only one that loses, but of course, you will lose if you don't know what you're doing, if you don't know what strategy you're using, if you have no clue, right? We do have a clue, we do use risk management strategy, and we learn how much volume we should trade with our account, okay? Maybe it's not smart to go 1 Bitcoin inside the market. Maybe we should go 4 times less, or 6 times less, to make a reasonable gain, right? But it's nice. Be able to leverage allows you to grow much more efficiently. You do the same with mortgages when you buy a house, right? You're buying houses with money you don't have. It's from the bank. This is the same, similar. So the brokers. This is actually the broker we use, Multibank Group. Brokers, as I said, are the intermediators, and all they do is give you access to liquidity, right? They work with the biggest financial institutions and banks, and then through these liquidity suppliers, they allow you to put trades in the market, and either you win or lose, they will be making commissions on every trade you do. So they have, our broker has 1 million customers worldwide trading the markets. Imagine they make €1. Imagine everybody does 1 trade every day, and they make a €1 commission for every trade. So they make a lot of money in the brokerage business, right? And this is how the brokerage works. And today, we are going to teach you how you can trade through a broker, okay? So brokers are nice because they give us all the tools for us to trade the markets. What tools are these? So we use MetaTrader 4. MetaTrader 4 is a software. It's actually from Russia. It's a company MetaQuotes, they're from Russia. MetaTrader 4 is a platform where you will have the charts, the list of symbols, you will see how much money you have, and then you can do your trades there, right? And this is the software you need if you want to become a trader, okay? And it's free, okay? You don't have to pay for the software. And we have MT4 app, so you can go into your MT4 in your phone. I don't really recommend this if you are trying to be more professional with your trading. We use the desktop version. You will see afterwards, okay? But through MetaTrader 4, this is how we trade, okay? We have explained to you until here how the markets are, how they work, how we perform transactions, what is leverage, okay? So now you're learning the software we use, okay? MT4 trading statement, this is a fantastic tool because in MT4, it works just like a bank account. When you go and when you log in into your bank app, you can export statements and see the list of transactions you've done, in and outs, if you have been charged a commission, or if you have made a profit with any investment in the bank. This is the same. MetaTrader allows us to export detailed statements on how much money goes in the trading account, how much money goes out, how much profit you made, how many losses you had, and everything, okay? It plots all the stats in a PDF file. And also, the good thing about MetaTrader is that we can connect our trading account to platforms like MyFXBook, okay? And MyFXBook is totally free. It's fantastic. It's a platform where you will connect your trading account to their website, and their website will import all the data of your trading account and will plot a very beautiful page where you see all your trading stats, the profit you make, the accuracy of your trading, and these are the tools that you use for your tax declarations, for example, because you give this to your bookkeeper or taxman or taxwoman, I don't know, and you can follow up how your trading is going. All right. So now that we know why MetaTrader is so nice, let's learn about the concepts you need to know when it comes to MT4, okay? So, first of all, I'm going to explain all these concepts. If you don't understand any of this, don't worry, because Scott, after this, is going to do a live demonstration on chart, explaining every single one of them. So, it's going to be great. Buy and sell. We have already talked about this. You have a MetaTrader, like a panel, okay? And you can click and buy, and you can click and sell. It's very simple. This is how we place trades, okay? Lot size. Lot size is the unit of volume. Now, we talked about before the Bitcoin trade. We said the example with 1 Bitcoin. So when it comes to MT4, we use this term, lot size. And this is the size, the volume of the trade. So, and it's measured in lots. For example, if I trade 1 Bitcoin, I'm trading 1 lot of Bitcoin, or 1 contract of Bitcoin. If I trade 1 lot in oil, crude oil, it means I'm trading 1 contract for 1 barrel of oil, okay? If I trade 1 lot in euro dollar, depends on the leverage, I will be trading maybe 100,000 euro in the markets, okay? Depending on the leverage index that you saw before, 1 to 10 or 1 to 500. So this is how we set the volume of the trades. This is how we set the size. Then we have the price on the charts. Of course, the charts will be displaying moves up and down. The price is not only one, it's the bid and the ask price. So the bid price is the price for when we sell. Okay, when we sell on the chart, it's the bid price, and the ask price is when we buy. Okay, now these two prices is what makes the spread. The spread is the difference between the buy and the sell price, and this difference is a profit the brokers make, because when you open a trade, you are already in a little loss. For example, let's just say Bitcoin. The Bitcoin spread is 16,000 is the bid price, the ask price, sorry, and 16,001. So there's a $1 spread. That means when you place the trade, the entry price will be at 16,001, but the price is at 16, so you're actually in a little loss. Okay? If you're trading one lot, then you're losing $1 in this trade automatically, right when you start it. So this is how brokers make money, and the spread may also change depending on how volatile is the market. But this is what the spread means. It's the difference between the bid and the ask price. Then we have the unit of measure when it comes to vertical moves. So let's just say this stock goes from this price to this price. We will measure vertically the price difference, and that will be the points on the chart. Okay? And then the pips is the points divided by 10. He will explain everything on the chart. Then we have automated levels called stop loss and take profit. Now, stop loss is basically a level where I tell MetaTrader to close my trade if it goes bad. Okay, so I don't have a massive loss in my account, so I can leave the computer. Okay, I set my stop loss. I go do my thing, or I go do whatever I need to do. And the stop loss, for example, is if I buy Apple stock at 120, I can say to MetaTrader, look, if it reaches 110, close the trade there. I don't want to lose more than that. So this is how I set an automated stop order to cut losses early, and it's automatically done. Same with the profits. Let's just say Apple goes up to $150 a share, and I'm making $30 profit for every share I've traded. So I don't want to miss out on that profit, and I'm not going to be on the chart. I'll set up a take profit level. Okay, and we call them SLTP. More simple. Then we have the candles. Now the candles are actually called Japanese candles, but there's many different types of charts. Maybe you've seen charts that look like lines, a line, right, on the chart. But candles is a much better chart we use as traders to get even more information. And candles gives us so much more information than line charts. And you will see how they look. And then lastly, indicators. When it comes to the charts of MetaTrader, we have the price chart, but what if we want to get more information? For example, we have indicators where it will automatically draw key levels. Let's just say I'm very interested in what the price does in Bitcoin when it's at 17,000, 18,000, 19,000. We call these sweet spots. Okay, and there's an indicator that I give the parameters, and it draws all the sweet spots. Okay, and then in the background I see the key price levels. So we also have these kind of tools that we can put on the charts. And these indicators, there's two indicators we use for the institutional trading strategy that we use. Okay, and now comes the moment you see how everything is. Okay, are we all good?
Yep.
Yeah. Is it too much? No, perfect.
Cool.
So now Scott will do a live demonstration on MetaTrader.
Can you give me that screen? Is it two fingers across?
And he will show you how to set up a demo account and then how the concepts work in the chart.
Yeah, so bear in mind, like, this is not how it looks on your computer at home. It's blown up, you know, everything looks really tiny. So, wow, it's even smaller on here.
Yeah. Okay. Where's the mouse? Here it is.
Okay, so to make a new account, we open an account. So you just go to the top, file, new, open an account, and we're already connected to our broker here, so Multibank. You'd go to their website to download this app, this program. So this is like industry standard. Anywhere in the world uses MT4. It's like the Adobe of trading or the Microsoft of trading. Like MT4, do your research, is like if you don't use this, then you're using like eToro and these sort of apps, you know, that you don't get the advantages. So you would go onto multi-bank website to download the MT4 program. There's also MT5, which is just a newer version, but we use MT4. It has everything that we need. And then once you've downloaded the program, you open it up, and then you would search now for this. This is the account that we would link, so we tell you how to do that. And then you can select now, do I want to open a demo account or do I want to open a real account? So always, obviously, open a demo account. So you've got a list here, you probably can't read them, but it says demo, real. These are different ones. And then it has a ping here, which is like how quickly I'm connected to the internet and how quickly I can place my trades. So the first one, because I've lost the mouse on it, it's so small. Where's the mouse? Well, next, right? Can you see the mouse?
There it is. Select the first one.
Okay, and then create a new demo account. And it's a demo account, so in here you can put whatever you want. Bob Dylan at bobdylan.com, 6666666 for your telephone number, anything, it doesn't matter. This is just a demo account. So you just set up your demo account, and then what we would do is probably select something like a 10K demo account, right? And then you say yes, that I'm ready to receive an email to open my demo account, and then we're done. So that's it. 2-3 seconds, a couple of screens. Makes all these bing bong noises, that means that you're connected and it's working. You can also check in the bottom right hand corner that this is green, that's the information transferring back and forth to your broker. It's asking me to download the latest version there.
Close it.
Yeah. And then there's... Okay, cool. So let's go back to the concept now. So this is your chart. These are your candles. Obviously, it looks like a candle. You know, you've got like the little block with the wick at the top. It's actually called the wick, or a pin, or anything like that. And then at the top left here, we have our sell. So if we're expecting the price to go down, we would click to make it sell. Or if we want to buy, we would click to make it buy. And that's called one-click trading, because obviously you see an opportunity, you don't want to go and like type things out and think about it, and then it's already started to move, and you're like, like I missed it, I missed a good spot. So what you can actually do also, so you can go and click up there. I think there's F9 is the shortcut as well. You can just pop it up on the screen, and then you place your trade at the market if you want to. So should we do one? Should we do a trade?
Sure. Maybe set closer to the candles as well.
Yes,
So you
let's zoom in. It's so small in here. Okay, we'll zoom in.
Yeah.
There you go.
So now you can see.
It looks like a candle, right? So, like Carla said, there's a lot of information in these candles. So you can see here, for example, let's look at this one. This means that the price has gone all the way up to this level and come all the way down to this level, and then finally it ended here before going on to the next candle. So you can see there's a lot of information. Then if it was just a line like this, there's not that much information. All it will tell you now is that it's gone down, but you don't actually know how much it's gone down. Did it come back to certain levels? You can see here this sweet spot that he was talking about, which you can see the reaction of the sweet spot. You can see what happened there. It went up, it hit that sweet spot, and it went down. So there's lots of information in these candles. You can see how they're actually going down, touching these lines and going back up. It's probably a bit advanced at this stage, but there's a lot of information here in this chart. And then so let's talk about the spread as well. You can see there's different prices. So if I'm to buy, it's completely different to the sell. So there's a little gap there, yeah? So that's where they would make their money. You can see there's a little gap, and also on this side as well, you can see that spread there. So let's go ahead and place a trade, up or down?
Down.
You think it's going to go down? Anyone else? Indecisive. Let's
Because
go.
I'm interested in.
So like I say, there's different ways.
That's what.
Okay, yeah. So you've got to accept the terms and conditions. This is because the first time you open the demo account as a new demo account. Oh, sorry, and one more thing, super important, is your lot size here, so how much you're putting on there. Everyone makes this mistake, which is why you have a demo account, play around, make sure you're using the right lot sizes, because if you're doing 10 times whatever gold's at, 17,000 something, then that's a lot of money up and down, yeah? So just make sure you're checking that beforehand. And how do we open the trading with the trades at the bottom? Can we open this up at the bottom, Carlos? I don't know how to do that on the Mac. You know, to see the actual trade here, the terminal. You can also, which is really nice, that I prefer now, same sort of concept. You can actually click. You can click on the screen where you want to place that trade. So you click, say you click here, for example, and then it would draw a line. So let's bring it up. You'll see it at the bottom now, pop up at the bottom. So did you say down? Sorry.
Mm-hmm.
Yeah. Okay. So let's go really small now. So we don't. Yeah. Okay. So there you go. See, I pressed sell, and this green light popped up. You see the green light? So this is now saying that order went straight through to the broker. The broker's put that, so that's a live trade now. You can see here the trade has popped up at the bottom. So you can see here I'm in my trade. I've got 10,000 and we're losing money already. So you went the wrong way. But that's fine. I'm joking. And then you can see what time that order was placed, what type of order it is. So it's a sell order, the amount of volume, which is how much we traded, 0.01, which is like nothing. So don't worry. And then what symbol it is, this is gold. You can see all the different tabs here. So these are all the different symbols and stocks and Forex, you've got them all there that you can select. And then you can see the prices. So, hey, we're making some money, it's gone down. So our level is here now, yeah? So we said, at this price, we expect it's going to go down, and it's going down. So what we can do now is, we can, if I can see where the mouse is, can anyone see it?
Yeah, it's on
Where?
right next to the buy sell.
Oh, it's in the top left corner, okay. On here it's like a millimetre. Okay, so you see this green line. What's really nice is you can pop up the window as well and it will give you all the information. You can type them in manually if you know the set levels. But you can just click and drag. You see this red lines appear? So this is my take profit, TP line. So I'm going to say, I'm going to be greedy and say when it gets all the way to the bottom here, I'm going to take that profit. And if you hover the mouse over there, if it pops up, it will actually tell you what that value is. So if you get to that level, it's $20 or whatever it is with this tiny amount, you know. So I believe if it gets to that level, we made $20, and then, super important, that you don't just leave it as a take profit. Let's say, you know what, I think this level is going to go, I think it's going to go down here and touch this, I'm super happy. If it starts going beyond this level, I clicked the line, dragged it up, I want to stop the level, I want to stop the trade, yeah? I want to stop that. So this is where your risk management comes in, because now, if I lose, I'm going to lose this tiny bit, but if I win, I'm going to win this massive amount. So that's where, you know, risk management comes into place, and it's no longer a coin flip. You know, you're actually, if you're managing properly, you could do this 200 times incorrectly, one after another, and then you'd have no money left. You know, to make 200 calls incorrectly, like it's very, you know, even if you ask your kids, like pick one. I mean, we're winning now. You just sit down, so you know, it's 50-50, obviously. But what we will see now is that we can get those advantages. We can find those moments. Let's have a look, and also I'm going to zoom out so you can see some of the other indicators that we do, which are really nice. You can look at different time frames. You can get different time frames. So that before was the 1 minute, which is obviously every minute. And then we can see here, you can kind of start to see now Carlos's strategy, which you'll go into, which actually help you get that tiny edge, which is what you need. That's all a strategy is. I mean, There's people that trade on lunar cycles and news and whatever. There's tons of different strategies. We've tried a lot. We've tried a lot, and Carlos has really sort of nailed this one. It's easy to transfer to the market. And I'll just go over this quickly, what it is. I don't want to take up too much time here, but you can see the different trading sessions here, which is an indicator. So we've added this in. So we've added an indicator in which tells us where it's most likely to move. You can kind of see, like, in these periods, that's where it does the most movements. So we have an indicator there that tells us when those moments are going to happen. So we're actually out of one of the sessions now. So this is Asia. This is London and Europe, and then this is New York or America. This is when their stock exchanges open. So when they open, that's when all the trades come in and everyone's going crazy. Then they take their lunch break and it slows down a bit. And then it fades into the next day when their marketplace opens. So that's when all the trading happens. So it makes sense to be trading then. And you've also got the lines here, which is sweet spots or key levels, which are round numbers, set numbers that are very quite clear to see. And then there's a lot more that goes into it, but you can kind of see the lines. You see these random lines. So these are where our trading strategy comes in. So you can see actually we're at one of the lines right now. You can see we're actually right on this line now. But you can see how it reacts to these levels that we have set. We can see this is part of our strategy here. One of these moves here, and one of these moves here. These different strategies that come into place where we can get that slight advantage that we say, I'm really certain that it's going to do this now. Yeah. So then you replace your trade. I'm pretty sure we got stopped out. We lost $1, so that's fine. You can do 9,999 more trades, so don't worry. But yeah, so you'll see the strategy, and yeah, I found it quite. It takes a bit of getting used to. You've got to be trained by a professional. But what this demo account allows you to do, that anybody can do, is you can just go and play around, like what we've done now. You're going to press the button and it goes up, and you go, I meant for it to go down, or I meant for it to be a smaller amount or a bigger amount. So that's the luxury of a demo account. You don't really get anywhere else that you can play around with that money, and yeah, get used to it. So I don't know if there's anything else to cover. Any questions? No? Cool. And hand it back over to you, Carlos.
Yeah, sure.
Okay. 2 fingers, 3 fingers.
Thank you, Scott.
Thank you. I don't know where the mouse is.
Okay, so that was our live demonstration with Scott. And yeah, so yeah, what we wanted with the live demonstration is that you saw on real time how is it that we look at charts, find the concepts we explained to you, and then how you do a trade. He only did one, but that's how we do every single time. Okay, we study and move to the downside. Okay, we're gonna sell, place our stop loss, place our TP, and then that's it. We just let the trade work. Okay, and we do a strategy that is called peak formations, and it's based on an institutional pattern that we analyze on the charts, because the financial markets are moved by these big participants, the governments, the big central banks, Federal Reserve, the financial institutions, banks. They move the markets. Okay, and what these guys do is basically try to get the enough liquidity for them to place the trades, okay? Because what is the difference between institutions and us? We traders, compared to them, we have very little money, okay? So if I want to buy 1 share of Apple, I can do that every time, every day, every week, okay? There's probably going to be liquidity to back me up to buy 1 share of Apple. But what if I want to buy $10 billion worth of shares in Apple? What if an institution wants to buy that much? They can't buy it every day, right? Because institutions need inventory, liquidity. If I wanted to buy 1 trillion eggs, chicken eggs, I cannot do it in the supermarket. I cannot do it most of the days. I need to find a supplier that can back up this transaction, right? So it happens the same in the markets. And these big players, they have algorithms and all sorts of tools to stop out retail and small traders from the market. So when all these people, large group of people, of small traders lose their money, then that liquidity is grabbed and then they place their trades in the market. So the market is an institutional game, and it's a battlefront, really. So there's two types of traders in the world. The traders that analyze the charts with very basic strategies that will get them to lose money most of the time, or strategies that will allow you to understand the institutional patterns, the institutional tracks. We're following the tracks. It's like if you went to the war, to a battle, and where do you want to be? Behind the tanks or down at the trenches? It's something like that, okay? I want to be behind the tanks, right? Because it's likely I will make it through the battle. This is the same. Now, we have a full strategy that we have been using for some time. I mean, this is the track record of our strategy since September 30th that we started using it. And this is an account that has grown from $100,000 to $124,000 using this institutional trading strategy, okay? It's tripled. And with this strategy, you will see most of the days, understanding the institutional tracks in the market, we get to profit most of the days, okay? Some days we do lose, but, the days that we lose, that we're wrong, we make sure our losses are small, and when we win, we try to win big. And this is how that's how risk management goes into play, because when it comes to $100,000 account, the first trade we ever did with this strategy, we risked $1,000 in the stop loss in order to make at least $3,000 to $5,000 with the take profit. So that's risking 1% of the account in order to make a 3 to 5% gain on that trade. And what this does is allow us every day to have margin of error. And just think if I do 10 trades, okay? I go for the week, it's Monday, and I'm going to do 10 trades this week. If I risk 1 and I make 3 when I win, then I can maybe lose most of the trades. I can still make money. Because if it's a 1 to 3 risk-reward ratio, and let's say I take profit on 3 trades, on the other 7, I hit the stop loss. So I've lost most of the trades, but still 3 wins times 3 is 9%, minus 7% losses. So I'm still 2% up for the week. So this is how a risk management strategy allows you to be very consistent when you trade. And this strategy is super profitable because we basically trade every day. We actually do 10 trades in one day, sometimes 15. We're trading oil, gold, Dow Jones, Nasdaq, the euro dollar, the pound dollar. We trade many assets, 10, 12 assets on the same window. Because if you remember from the live demonstration before, you saw the colored windows, right, on the chart. Asia, London, New York. We focus on the 1 hour of every opening that we can every day. We're not awake for Asia because that's in AM hours. But we get London opening 9 in the morning, New York opening 3:30 p.m. So this first hour is crucial for finding these institutional tracks. And then we analyze the hour prior to this opening hour, and then in a 3-hour window, that's where we have placed our trades. And we are working 2 hours a day to perform this much with the strategy. So, what happens when people want to trade? This is very difficult. I don't have time for this. I don't have time to be in front of the charts all day. I work, I have a family.
I'm gonna be there all day.
Yeah, exactly. You know,
Yeah.
or oh God, I don't know. There's many reasons people don't trade because it looks so difficult. Well, we trade 2 hours a day only, and it's a very simple strategy because while many traders use a lot of indicators, use a lot of chart patterns, we study one chart pattern, which is the peak formation, and then we find this pattern at this most important hour of the day, the openings. That's it. And this is about it. So this is how the peak formation strategy works. And next Friday we're going to be teaching all of this. Okay, these are all the concepts, smart money concepts. That's how we call institutional trading smart money, because the smart money is the institutional money. And we're going to teach all the concepts and the full peak formation strategies, okay? This strategy is probably worth thousands of euros if there was a course to learn this strategy. But because you are here today, we want to give you the opportunity to be here with us next Friday, okay? So now this is the strategy. What else do we do? In the community, we teach people how to trade, how to invest in cryptocurrencies, how to invest in the stock market, how to save more money. We give a full educational program to many people around the world. We do it through an American company that we work with, and you know, this is one of the areas that we teach. And we're going to be doing events every week. Next Friday is the peak formation strategy. The following weeks after New Year, we're going to be doing cryptocurrency trainings, stock market trainings, personal finances trainings, and we're going to be teaching many things. And you can decide to attend all these events or get to be inside of our team. That's all. And if you're a member in our team, you come to all these paid events for free. We did a free one now because it was the opening. This is the first event we do in Mallorca together, Scott and I. So this was an opportunity for you to see what it is about. So hopefully we can have you over next Friday or any other week events that we're going to be doing. So thank you so much for coming. And yeah, I mean, unless you want to add anything.
No, I'll just say, like, from my personal experience, like, I've tried, like I said before, I've tried so many different things, and I've got my laptop here. I can show you my trading account. I've managed to grow my account by 11% in 2 weeks, which is like pretty significant, and it's allowed me to actually, you know, I work a full-time job, but in my lunch break, what I normally do at the moment is I'll wake up normal time before I take my son to school, and I'll have a little look to see what's happened prior to the day in Asia and in London. I'll have a little look, see what's going on. Then in my lunch break, I'm like, okay, so let's see, you know, it's coming up to that time now. And you can already start to see with this peak formation strategy, whether or not, you know, you can go through all the different tabs, you can see, is gold nearly there, is oil nearly there? You can see whether or not it's lining up for a trade. If it's not lining up for a trade, you just move on, you know? It allows you to see at a very quick glance whether or not a trade might happen. Then you would go and sit down and study and see, okay, you know, let's see how this plays out before I place my trade.
Actually, in this course, we show real trade examples.
Yeah.
Like this date on the Dow Jones, it's an American stock index, we traded this move. What was the analysis behind this trade? Why did we trade it? How did we trade it? Everything. Mm-hmm. So it's explained with real trade setup examples.
And we'll bounce, you know, we've got like a Telegram, and, you know, we chat to each other, we can bounce ideas off each other, and that's the whole point of having this community, because before I would do these things on my own, you're not too sure, you're not sure if you're right or wrong, and sometimes you're right, the trade goes and you make a profit. I think I made like $700 the other day on a trade, and I was like, wow, you know, it's a really good trade. And then actually I showed Carlos, and he was like, well, be careful, because you actually did too much the size, the lot size, you know, or you think you've made the right analysis and that's why you've won the trade, but it's incorrect actually, and it just you got lucky. So that's where it's good to bounce the idea off of a professional, somebody who's done hundreds and hundreds and hundreds of trades, as opposed to me who's done a couple of hundred trades. But yeah, I mean, there's tons to learn, but I promise you, like, this peak formation strategy is really powerful. Like, it's not super difficult, and if it's there and present on the day at that time, get ready to place the trade. If it's not, you can walk away. And most of the trades are like 20 minutes long. Like, obviously, if it runs and it's going crazy, just leave it to run and let the profit roll in. But if it's not, you can be in and out within 20 minutes, half an hour.
Yeah,
And we
100%.
can show you some stuff. Like I made 3% today with the strategy, so there's a lot to learn.
And that's important that you listen to him, because it shows how simple it actually is. Scott just started 2 weeks ago, and he's okay. It's demo account. It's not real money, but hey, he's trading like if he was trading his real money, and he's achieved these results in 2 weeks. So this shows you how simple it is to learn it, and then how time efficient as well, because we both are very easy. We both have families. We both, work out this business. At the same time, we trade and invest and everything. So we always try to find simple systems. Yeah, simple systems are always the best, because that's how people can profit from them in the best of the ways. So thank you for sharing your testimonial, and guys, thank you so much for coming. Please give yourselves a hand. Hopefully we have you next
She
Friday.
owes you $1 though.
Oh my goodness.
You lost it. You lost $1.
It was a demo.
Oh, it's a demo.
Nice.
We will not die for
Some
it.
gold.
Demo.